We are back again. All right, so now we are live here on our YouTube channel. All right, my name is Gabriel Uriton, your Signal Lord, and you are welcome to my channel. Please don't forget to subscribe, don't forget to like this video, and don't forget to share this video with everybody that you have around you over there. Now, this afternoon here in Nigeria, we'll quickly be going live. And what we want to do is very, very simple. We'll just quickly have a discussion about what CPI is all about. And you see, you need to understand that most traders out there, they tend to trade what they don't know. You know, they tend to trade the noise, they trade things and instruments that that is very, very volatile, and the instrument that their accounts will not be able to trade. All right, but then I'll be doing a live session here so that we'll quickly see how we can make some small pips in the market. All right, so don't forget to like, don't forget to share this video, and don't forget to invite every trader out there that you know. Tell them that we are live and let them know that we are ready to trade CPI. But then we are going to start this discussion. All right, so we'll be looking at what the market is saying. We'll look at how CPI can easily affect every instrument that we have. All right, once again, you are welcome to my YouTube channel. If you have not subscribed, click on the subscribe button, and if you have not liked this video, there's a thumbs up there. Just click on that thumbs up, and if you have not started following us, you can easily start following us right now, right here. Okay, so for those that are live, you're welcome once again. Now let's quickly dive into what CPI is all about. Okay, what CPI is all about. Now I'll just quickly do one or two things. Now, sorry, I just had to quickly check my system. I have I have a trade running on this guy. Don't mind all my pending orders thereabout. So I have a sell stop there. I think I can do another sell stop because the way price is doing right now. Let's see. Well, it's looking like the fundamental is coming out, so I'm going to do something like this. So I'm using 0.02. So my entry is going to be 62.466. 62.466, then I have 62.107. okay, 62.466. sorry, I'm doing sell stop on oil. Okay, so 62.466, then my take profit is 62.107. Okay, let's do 8 then. It's looking like 7 is not coming out. Alright, so now I already had a bad trade for a long time. So let's see how it runs. So this is what I've been doing for a while. You can check the account history. This account was funded 7th of March, and right now we have a profit of over $515, which is not bad. Right, so now, but we are waiting for CPI, and then what are my expectations? Most especially for EURUSD, and when it comes to EURUSD, I should be looking at trading below this point because I'm actually expecting a fall in the longer trend for EURUSD. So let's see if CPI will actually move the market. But then there's some noise here. So what if I do something like this? And then what if I do something like this? All right, so now let's quickly go into our discussion. So before we go on to looking at how the chart is going to move, what will happen, and all that. Okay, so let's quickly discuss about CPI. Now, from my understanding, I got to know that CPI is actually a major fundamental that comes out for the US dollar. Sometimes you see it on a Tuesday, not every Tuesday. Sometimes you see it on a Wednesday. And guess what? CPI stands for Consumers Price Index. CPI simply means Consumers Price Index. So if CPI is Consumers Price Index, what does it really signify in the market? Now, basically, it helps us to understand the change in the prices of goods and services. Now, when you say change in the prices of goods and services, which means if there is rising, if price is rising rather, that means there is what we call inflation. INFLATION, that's inflation. And then if price is falling, which means the prices of goods and services are falling, that means it leads to what we call deflation. All right, so there is inflation and there is deflation. Okay, inflation is increase in the prices of goods and services, while deflation is reduction in the prices of goods and services. Now, how can we use this to trade? Because when you say, okay, consumers price index, it is an indicator to measure whether there is inflation or there is no inflation in the economy. Very good and very fine. It's very simple. So how can we now use it to trade? Because the government and the central banks of the economy, they actually use CPI data to be able to track the cost of living in the economy. All right, you want to talk about different aspects of the economy and different services or different goods in the economy, talking about e.g. food. Food majorly is an important aspect for the economy, talking about rent, talking about clothing, talking about transportation, talking about health care, and there are so many more. So you now want to talk about all these things. How is the change in the prices of goods and services, how are they affecting the market to either make price to rise or to either make price to fall? All right, I know some of us are here to hear the buy and the sell. Don't worry, we are still doing buy and sell, but it might not be immediate. But let's quickly discuss about what CPI is all about and how it affects the market. All right, so don't forget this. Consumer Price Index is an indicator that is used to measure whether there is inflation in the economy or whether there is what we call deflation. Okay, so any of the two. So if there is inflation, well, it can be good for a short time, and if there is deflation, it can be good for a short time, depending on whether the government or the consumer, which is the citizens of the economy. Now, how does it affect the market? Okay, so let's quickly look at how CPI affect the market. I'm still going to give us some hints on, okay, if the news comes out in this way, this is what you are expected to do. If the news comes out in this way, this is what you are expected to do. All right, don't forget, stay tuned. Now, what and how does CPI affect the market? Now, number one, let's quickly talk about the currency market. That's why you can see that I have some currency pairs here, and most of the currency pair has to do with the USD. Okay, so let's quickly look at the Forex market as an example. So how does CPI, how does it affect the Forex market? Okay, so basically, when it comes to the Forex market, when the CPI is higher than expected, because in fundamental events we have what is called the actual data, we have what is called the forecasted data, and we have what is called the previous data. Okay, so previous data is what it was, all right, what the data was. So for example, let's say the GDP of Nigeria previously, let's say as an example, all right, I'm not using the actual figure now. So let's say previously, this is just an example giving figures and data now. The GDP of Nigeria previously was 2.3%, and now based on the current happenings and the analysts in the economy, we are now expecting the inflation data, the GDP data to move from 2.3% to 2.1%. Now, 2.1 is the forecasted figure, while you have the 2.3% to be the previous data. So now, today that we are now expecting the GDP data, which is now going to give us an informed decision about, okay, is the GDP, is the economy, contracting, or the economy is expanding? Because one of the importance of the GDP data in the economy is to help us to know if an economy is actually expanding or an economy is contracting. So in contracting, that means the economy is going down. In expanding, that means the economy is what? Is rising. All right. So now, when it comes to CPI, which is the data we want to use to trade for today, we are seeing that if the actual figure is higher than the expected outcome, then it shows that there is rising inflation, and it will make the central banks to actually increase their interest rate. Because lately the central banks, which is the Federal Reserve of the US, they have been maintaining a steady position when it comes to interest rates. They have not really been increasing their interest rates because of their inflation target. All right, so now if there is increase in CPI data, now the next interest rate data we should be expecting the Federal Reserve to actually increase their interest rates. All right, and then if the CPI data is lower than expected, what it means is that it shows that there is deflation, all right, in the economy, and it could make the central banks to actually reduce interest rates, which will now make the US dollar to be weak. But then I know we have gold traders in our midst, because we are looking at how it will affect currency, how it will affect gold, even the stock market or in the indices market. So we want to see correlation all around. So by 120, 125, we should start having our data imputed on our platform. So how does it affect gold? Because if you look at it very well, gold serves as an other means of currency, because gold was the first form of currency before we start having paper money, right? Now, when it comes to gold, how does CPI data affect gold? It's very simple. Gold is considered a hedge against inflation. So, which means when there is a rising cost or a rising data for inflation, now gold price can also follow suit, because when you say something is hedging, all right, now, but if higher CPI will make the interest rates to increase, it can put pressure on gold, because rising interest rates will not make yielding assets to be more attractive. So what it will do to gold is that it's going to make it less attractive. All right, so when it comes to gold data now, if it's good for dollar, now you should be looking at the other way around for gold. When dollar is increasing in value, it is expected that the value of gold is also what? Is dropping. All right, so we are looking at correlation between the market, between the currency market, the commodities market, and also the stock market. All right, so I've been able to explain the currency market, telling you about the interest rate hike. If it's good, you expect the value of the currency to be high. If it's bad, you expect the value of the currency to be low. And for commodity like gold, now when the currency is going up, you expect gold to be dropping in value. Now for stocks and the likes of indices, right? How does CPI affect the stock market? The truth is this: when there is high CPI, you are expecting the Federal Reserve to increase their interest rate. I've mentioned this and I'm saying it again now, which will in turn give a negative effect on the prices of stocks. So if they are increasing interest rates, basically it has a negative effect on the value of stocks. All right, so now it is time for us to start looking out for entries on the platform, whether you are using your MT4, you are using your MT5, or you are using CM trading, any form of platform you are using, you can easily get an entry and an exit, because there are different ways to trade all this fundamental that we are talking about, different ways to trade them, and eventually everything will go in line. Okay, so now let's continue. So for USDJPY, if I'm looking out for an entry, on USDJPY, then I should be looking at some key levels on the chart. Most especially, everybody is using a different platform, but please always look out for the levels of support and resistance on the chart. Levels of support and resistance should give us an edge where to put our take profits and where to put our stop loss, and also where we should have our entries. All right, so we are just a few minutes away from what CPI will do to the market today. So now, still going on, how long do you think the effect of CPI will last in the market? How long do you think it will last? Now, most of the time, because I've actually traded CPI one time, and within 10 seconds I was able to make up to $288 in profit, and then the effect was off. So within seconds, there are times, seconds, minutes, hours after the CPI is out, you see a strong reaction of price, which means you see a massive spike in the direction of price, and then sometimes it can be up to days, or it can be running into a week. Okay, so it's now depending on how long the CPI data will align to what the central bank policy and also the market expectation is saying. So the duration of the effect of CPI data is determined by whether it is aligning with the central bank policy or market expectation. That's what I'm just trying to explain to you. So now, somebody will now want to ask me, okay, I've explained CPI and all these things, so how do we now use it to place buy or a sell in the market? Very, 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 very simple. So all you need to do, come to your screen, because remember I said there are different ways to trade, right? So let's take a scenario that I want to trade GBPUSD as an example. So this is 1 hour time frame. Now remember, data can be good and it can be bad. Then let me see if my 4 hours time frame. So there are different time frame, okay, but majorly, please, I love trading USDJPY. Thank you. Now, if I'm going to trade USDJPY, please also, I need to factor in the spread of the broker I'm trading with, because sometimes spread can, come and trigger your trade, and after that, market will run opposite. Oh man, that's happened so many times. So, and I'm sure you don't want to fall a victim of that. So, all right, let's quickly dive into our entries, and let's see how we can, kick off some things. Let's see how we can kick off some things here. So now let me just quickly drop something here. So for those that wants to trade, probably you want to trade EURUSD, EURUSD, and well, I'm on USDJPY. So let's go start with USDJPY, right? So I want to trade USDJPY. You can decide to do a buy stop, because now you can decide to do a buy stop above the previous resistance here. A bit above the previous resistance, because there's no way spread to come and do strong thing at that particular point. There are so many areas you need to avoid in trading. So so I have this here. Okay, then 148.714. So now, depending on the platform you are using, just like I made mention earlier, so depending on the platform you are using. Now, dollar has actually been quite stable for a while, and the way market are doing, so you don't need to think twice So 148.719. So depending on the platform you are using, anything around 148.71, anything above it should be your target for buying. Your target for buying USDJPY. So you go to your MT4, look for USDJPY, and just check your chart. Go to your new order, change your market execution, change it to buy stop, and then 148.71. You can do 15, you can do 16, depending on the platform you are using. And then a take profit, well, I think 20 pips is not bad. So if you are doing 20 pips, that's 148.991 something. So depending on the broker you are using, you factor in the spread and everything you need to factor in. So if price wants to fall, then we are looking at where I have that my red line to be. Okay, so if price wants to fall, let's do a sell stop at 147.566. Sell stop at 147. Okay. Yeah, 147. All right, technical issues there. So 147 point what again? Let me just quickly confirm that. 147.566. All right. Sell stop at 147. 147. 14. So I'm having issues with. Okay. 147.566. All right, then take profit should be so take profit will be 147. Well, let's do 20 pips. So 20 pips will be fine. So 20 pips will be fine. So we'll do 147.366. Now to factor in spread, depending on what the spread will be. So let me just do 300. Then now, in terms of risk management, because most often than not, most of us we can decide to now place a trade, and then we don't know how to manage our risk. You see, risk management is what will give you profit in this market. If you don't know how to manage your risk, forget about it. All right. Risk management is what determines how profitable you will be. So now you can see the account I'm operating with. So depending on the account you have, if you have let's say 100,000 in Naira as your trading account, there are some accounts that cannot actually trade some things. Okay, some accounts cannot trade some things, so you need to actually run away from some instrument. All right, so you need to run away from some instruments. So how can I do my risk management so that I will not lose my account? Now, the lot size, LOTSIZE, lot size is a major factor to consider when it comes to picking a trade. So lot size is determined by the amount you have in your trading account. So don't make the mistake of you don't make the mistake of you trading gold with an account of 100,000 Naira. It doesn't make sense, all right? It doesn't make sense. So you need to cut your coat according to your material. your material is your deposit. So the quotes you want to make should be based on the lot size now. So you determine the lot size based on the account size you are operating with. All right. So now it's just less than 2 minutes, and we are getting close to the news. Let's see what's going to happen. All right. Don't forget to like this video. Don't forget to subscribe to my YouTube channel, and don't forget to comment. Okay. And don't forget to share this video. All right, share it with everyone that you think that needs this video. We've talked a whole lot about CPI, and remember, this is just a discussion, and let's see what will happen. This is 129. Now, anytime a news is coming out, that's when you'll see that your internet, look at it, it's almost time, and the spread is wide. Okay, 129, less than 30 seconds. Because anytime you see spread increasing, that means it's almost time. So price can go up, price can come down. So depending on the location of price, that's what will happen by 130, almost 130. You see the way the spread increased. This is how some people used to make money. All right, it's 130. So what do we have? Now, is the news good or is the news bad? So let's see. Is it good? Oh, wow. The news is bad. Now, for those that wants to trade this news data, well, my sell stop, I will just still leave it there. I don't sell USDJPY, but because of the news, let's see what will happen. Now, I'm not seeing a major move yet. Okay, on USDJPY, no major move yet, but let's see gold. Okay, gold, no major move yet. No major move here. So expectation for gold, I think, is actually tilting towards a buy. Gold wants to tilt towards a buy. So let me still check. Let me check. EURUSD, what are you doing? Okay, expectation for this guy. Now, okay, it has not done anything yet. GBPUSD, what have you done? Okay, nothing. No major move yet. Now, remember we talked about market expectation. So when market expectation is not fully met, you are not really expecting volatility. You are not expecting any too much price movement for the instrument. All right. So now, if we are to trade, now let's check what the strength of dollar is. I'm checking it currently on my system, and I've discovered that dollar is just. The news came out bad. The first CPI M/M, which is month over month, came out to be 0.2. Second news came out to be 0.2. We have the third news to be 2.3%, showing that the news is bad. But then I'm still expecting USDJPY to fall. You know, talking about fall, the law of retracement. So it has gone up. Let's see if it will retrace back. Somebody will say, well, what we're having there is not looking like coming back. But then, well, you can never, ever, and ever know. All right. Thank you for joining my live session this afternoon. This is Gabriel Oriton, Signal Lord. And don't forget, subscribe if you have not subscribed to my channel. You can also share this video. And don't forget, click the thumbs up button that you have on your screen, which is for you to like. All right, thank you, and thank you so much. So I will see you in my next live video. Okay, chill out.